What's up everyone, it's Karthik with MoneyVest. Welcome on board for our market open live stream. Hope you all are doing great on this fine Thursday, January 15th, as we are seeing the markets rotate back higher after yesterday's sell-off. We got the Nasdaq down over 1% yesterday. Nasdaq 100, it is recovering back over 1% pre-market, and S&P 500 also recovering all of those losses from yesterday, down about 0.5%. It is pushing up over 0.5%. Right now, we got Nvidia pushing up 1.5%. We got Meta Platforms back higher, 45 basis points. It was selling off quite aggressively. Did a full video on Meta earlier today, so make sure that you do check that out as well. And then we got Tesla also pushing up over 0.5%, trading up to 441. I did sell the 990 calls on Tesla finally after a long time. And then I also did sell the 410 calls on Palantir, which is the highest possible strike available for Palantir. This was for December, both Tesla and Palantir for December of this year. So hope you all are doing great and can hear me and see me. Just give me a thumbs up if the audio in the video is good. And good afternoon, good morning, everybody. Wherever you guys are joining from, Vault, the trick is to always remain calm. 100%. The trick is to always stay calm. Never let them see you break a sweat. Very, very important. What caused a major reversal overnight? I think it's a bit of an overreaction from yesterday's sell-off, but overall, I think the technicals were suggesting for a bit of a recovery in the overall market right now. And we do have a lot of companies reporting earnings as well. TSMC reported numbers earlier today with over a 30% growth in earnings. So $3 in earnings per share, with revenues coming in over $33 billion. And we're looking at TSMC pushing up 5.5%. The entire semiconductor, so SMH for the win. It's up over 3.3% right now pre-market for the first time ever, trading up to over $400 per share. And that in itself is a huge milestone for SMH. As you can see, this is the parabolic run-up since April. This index ETF has more than doubled, up 135%. It's one of the reasons why I remain very, very optimistic and bullish on SMH. It is a very, very lucrative opportunity for semiconductors over the long term, and I will continue to dollar cost average into SMH. And VUG is also pushing higher, pre-market getting up over 78, 79 basis points. So good morning. Watched your Meta video. In your Meta covered call, did you collect all the premiums at the money? So not all of them were at the money. Some were out of the money. Some were close to the money. But yes, all of those were realized profit. Every single one of them. So $4,000 is actually realized profit, except for the last call that I've sold yesterday. Everything else is actually realized profit from the Meta calls that I've sold, with the adjusted cost basis now sitting at around 619. So I'm essentially break even on my shares. So that is the power of selling options. If you're able to consistently sell and wheel your shares, you're able to collect a lot of premium. And the best part about this is that it works even better if you are investing in companies that you want to own long-term anyway. So for example, Meta, I want to have it in my portfolio for the long term anyway. And the beauty is that I can collect all those premiums while I wait for Meta to start pushing up. So that right there is, in my opinion, a very, very smart way to actually lower your cost basis and collect premiums along the way. Dave, good morning. Semis on the move, 100%. Semis are once again hitting a brand new all-time highs. SMH up to over $401. So huge congratulations to everyone. Good day, MoneyVest community. Let's do this. Red markets, shame my capital is in CSPs already, which is good. I mean, red markets, right now we're seeing green markets. I mean, QQQs and S&P 500 both are pushing higher, and it's good for CSPs. If you sold puts and markets push higher, then it's possible that we do see a nice little bump in those options, right? So in other words, those options are getting further out of the money, and as a result, it's good for you as an options seller of puts. Yes, TSMC ripping. We covered that earlier. Caddy, what are your thoughts on SKU index and how it could mean trouble in the markets? And is it a metric you look to evaluate? So let's take a quick look here. So SIBO SKU index right now sitting at about 152. I'm not really sure how this index is calculated, but I'm going to do more research on this. Thanks for bringing this to the attention here. I'm not sure how this is calculated exactly, but for me, as you already know, volatility and the MoneyVest index is a more important, more accurate signal as opposed to anything else that's out there in the market. It's been back tested and it's got very, very strong results, but we'll definitely take a look at SKU index as well. VIX is back down. It is selling off, down about almost 5%, trading now under 16. So volatility is getting crushed back from its highs of 18. It's down another 12% from its highs. So as a result, we are seeing a little bit of a lift in this market, pre-market. NVIDIA also moving up. Okay, perfect. Green is good for CSPs unless your CSPs are with Netflix. Yeah, Netflix has been struggling. Depends on where your strike is, right? So right now, $88. So if you're anything below that, if you're out of the money, then it's possible that you're still fine and doing good. But yeah, I know Netflix has been selling off aggressively over the last several months now. Silver and gold pulling back as well. So if you come over to the daily chart, we're seeing silver down almost 5% and gold prices also lower by almost 1%. So coming off of their all-time highs. Bitcoin sitting at almost $97,000. So Bitcoin continues to move higher, which is good for BITX, and Ethereum also getting up to over $3,400, putting in some nice little upside for Ethereum ETFs, ETHE as well. I've got to sell some calls for ETHE as well. I haven't sold anything, so today might be a good day to open up some calls for ETHE. So that's where we are. Hope you all are doing great and are ready for Thursday. I believe Monday is going to be a holiday for the markets. Let me just quickly take a look. So 2025, we'll just do 2026 trading calendar from NYSE, and we'll come over here. So we'll pin this now. Boom, perfect, and we'll unpin that one. Okay, so this is the 2026 trading calendar, everyone. And then if you come take a look at January 19th, which is going to be next Monday, markets are going to be closed because of Martin Luther King Day. So in observance of MLK, markets are indeed going to be closed on Monday, January 19th. So we are going in for a long weekend this weekend. So that's good. You know, as option sellers is always good because we're still going to be paid for 5 days worth of premiums when in fact 1 day is going to be closed for the entire market. You're right. So why would you buy shares in the open market? Wouldn't you just do an in-the-money CSP with short time frame to get assigned, providing you wanted 100 shares, of course, because the premium would be high in the money? Yeah, I mean, you could absolutely do that. A lot of people do that. There's nothing wrong in doing that. If you're selling an in-the-money put, or basically very, very close to the money, that is very high delta. Premiums are going to be higher, so you can immediately lower your cost basis as well. You can absolutely do that. There's no problem with that at all. I think that's in fact one of the smarter ways to acquire shares, if you ask me. So, you know, for me, unless I feel like the buying window is closing down, if I feel like, okay, I only have a limited time to acquire shares before the stock runs higher, even though nobody can predict, but if you actually are analyzing from that perspective, then only then it makes sense, okay, I want to buy shares here. Otherwise, if you can be more patient, you can be a bit more disciplined, you can sell puts in the money, out of the money, close to the money, very close expirations, and you can acquire shares and get assigned that way as well. In the meantime, you're just getting paid to do nothing, like really just wait and get paid by selling options. So really, I mean, every single meeting that I jump on, back-to-back meetings every single day with members, one of the biggest questions they ask is, how do I get started with the trading options? Like, how do I get started with selling options? And it's not that complicated. Of course, getting the mechanics down, understanding the basics, fundamentals, and going through that proper education is very, very important. But once you get on the other side, so much is possible. So much is possible with so many things open up. You know, from a trading perspective, from a risk management, from a trade management perspective, from income perspective. And even if you don't trade options, I think it's really important to understand what is possible, right? What the opportunities are, so that you're not like leaving money on the table, you know? So good morning, money investors, everyone. No one singled out, all of you. Thank you so much, Mike. We appreciate you a lot. Thank you for including us to your club. And yeah, we appreciate that a lot. So Walter and I feel very, very invited and very welcomed. By the way, speaking of community members, Dave, if you're still here, guess who reached out to me? Guess who reached out? Guess who messaged me? I don't know if that person's watching the live stream, but it was quite crazy that I woke up this morning with their message on my Instagram. So I don't know if you're going to be able to guess, but some of the OG members will definitely, maybe, will be able to guess. But yeah, we've got decisions to make. We've got decisions to make now. Anyway, so coming back over to the market, we got gold sitting at almost $4,600. We got silver sitting at just under $90 per ounce. Crude oil is now back under $60 as the situation in Iran kind of stabilizes a bit. So we're seeing oil breaking that 5-day winning streak, coming back to under $60 a barrel, and support level is going to stay put at $55, $56. There's so many to guess from. Yeah, I know, it's crazy. But yeah, any stocks, Q&A open for the next 25 minutes. Any stocks you want me to take a look at, I'm more than happy to. I still owe you guys a video on cybersecurity stocks, so that is indeed coming. So CIBR is another ETF that I like very much. Consolidating sideways for the most part, and I am going to be analyzing a lot of these companies, including Fortinet, which was down quite a lot yesterday, down about 2.5%. Then we got Palo Alto Networks. We got Zscaler, CrowdStrike. All of these need to be analyzed together because of the news that came out from China, right? China pressure weighs on Palo Alto, Fortinet, as Beijing tells Chinese firms to stop using US and Israeli cybersecurity software. And as a result, they were dropping a little bit. So what's your long-term thesis on BITX? I mean, long-term thesis on BITX is the same as Bitcoin. That's really what it is. And you know, whenever you're looking at a derivative, it's really important to analyze the underlying first, because the derivative itself does not have any bearing on what the actual, the derivative itself has no supply demand. It has no fundamentals of its own. And it's really the underlying that we have to analyze and better understand what it looks like. So in this case, BITX, it'll be a waste of time for me to try to analyze BITX technically or from a perspective of demand supply, because it's an ETF and it doesn't have any fundamentals. So we really have to look at Bitcoin to better understand where BITX could be headed. And so my thesis on Bitcoin is that it does deserve a small allocation in my portfolio. Not saying it has to be a core big position, but it at least deserves a position. And as a result, BITX is that position. I'm looking for an asymmetric opportunity where, the risk is an inconvenience, the reward is life-changing. Really, that's where the asymmetry comes in, where you always want to look for opportunities where the total loss is not devastating, but the gain is life-changing. Like, those are the asymmetry of those opportunities that I like. And that's really what it is with BITX. If it goes down to zero, yes, it's going to be uncomfortable. It's a small inconvenience. But if Bitcoin goes up to, let's say, 500,000 or a million, that's 10x for Bitcoin. But BITX, since it's levered, is going to be significantly up more, right? 20 to 30 times. And that's really what I'm looking to do. So I did pick up 400 shares of BITX yesterday. $1 and $2 cost average, as mentioned earlier. And the plan is to keep it now at this level for BITX and then just keep rolling calls, keep selling calls, keep collecting premiums, keep selling options on it. So I need a hint. Dave, we'll talk about that. I think it's better because we've got a decision to make. Lyft and CMI and Team. So let's take a look at Team, because it is or has been part of the 2026 watch list. It is Atlassian. The path to profitability is what we have to evaluate very carefully. I mean, it's a company that's growing revenues very well. If you come over to the forecast for earnings for this year, $4.87, and then growing it to $5.64. So that is indeed a pretty strong growth rate. So, we're looking at $4.87. And then compared to this year, $368, we're looking at a growth rate of about 33%. And revenue is also expected to go from 5.2 billion to 6.3 to over 7.5 to eventually getting up to over 10 billion. Valuation wise, we're looking at 6 times sales, 23 times cash flow. So it is actually not a very expensive stock, so to speak. And the balance sheet's also phenomenal. You've got way more cash than debt on the balance sheet for this business. Yes, technically it is still struggling. It's been consolidating sideways, and I think it is coming down to a very, very attractive support. So anything inside this green rectangle is going to be that area of support, which I think we need to watch carefully, which is going to be all the way down to as much as 114, 115. So yes, it's been on this downtrend of lower highs and lower lows, but that is going to be the support level to watch at 114, 115 for Atlassian. So that's going to be this. Let's take a look at CMI. And wow, looks like we've done some analysis on this before. From April 2025, the stock is up over 100%, which again is true for many companies, but it has actually done that with a lot less volatility. Even on dips, it's down 5 to 7%, and then it rips right back higher. So this is actually a very, very stable, consistent, linear growth for CMI. So that is fantastic. But now where we are is once again at those overbought levels again. And so if we do see another 5 to 7% dip or a 10% correction, I would be looking at 525, 524 as a potential support to watch. So we've got a previous resistance and a higher low. It's got the perfect confluence there to watch for CMI as a potential dip buying opportunity. JP Morgan also raising its price target for CMI to $580, an increase from $485, and $580 is going to be, I think, 5% away from where we are now, 2.5% away from where we are now. So what's your game plan with BMNR and IREN? IREN and BMNR both are not a big position, rather small position. So IREN is, again, for options trading, BMNR also for options trading. So I did sell calls on both. IREN, I've got the $55 call. If it gets in the money, I'll see if I want to roll those out or if I want to keep it and let my shares go for a nice profit. And then for BMNR also, I sold calls yesterday that I sent out the alerts for. So again, they're mostly for trading options and generating premium as much as I can and capitalize on the upside if they start to move. BITX also has a fantastic dividend, and the options premium are fantastic. So you get compensated for waiting 100%. So you're actually getting paid twice. You are selling options to generate premium, and you're collecting dividends. So if I start running through the analysis for BITX, just like I did for Meta, I'm sure I have knocked off a lot in terms of the adjusted cost base. Like that is going to be much lower for BITX for me. So so it's like a double win for owning BITX, 100%. Okay, Boeing is starting to catch my attention. The administration keeps giving them business. I was watching a reel, which was actually quite funny on Instagram. It's like what goes on inside White House. We got this $100 million contract. Who should we award it to? And as the discussion is going on, as people are voting, people are literally buying stock of like Lockheed Martin, Raytheon, and then they're voting for these companies to win these contracts. And it's just like, it's so easy. It's like, it's just not even funny anymore how easy it is. And, obviously we looked at the stats of, politicians like Republicans, Democrats, doesn't matter how many of them have been able to outperform Warren Buffett over the last 5, 7, and 10 years is mind-blowing. It is mind-blowing. Warren Buffett actually ranks, I think, in the 25th or 27th spot, if I'm not mistaken, if I have to watch that video again. But he was like really, really low in terms of how much outperformance we've seen from senators, from people in the office. It's not even funny. It's ridiculous. Nancy Pelosi, of course, was the best trader of our time. Absolutely sniping options, sniping shares, and just coming out ahead every single time. Of course, not a surprise, but yeah. So Boeing, we'll take a look at. Very, very strong recovery from those levels. However, getting up to pretty overbought levels now. And we'll look for a support around 225 for Boeing. Yeah, so Palantir and Tesla, we have covered at quite details in our market update. So definitely check that out if you haven't already. For Tesla, I sold a 990 calls. For Palantir, I sold a 410 calls. Again, super far out December and really, really far out of the money. Both Palantir and Tesla would need to more than double in order for me to get in the money in 2026. So Do I think Tesla's going to more than double this year? Probability is really low. I mean, yes, it can go up another 40-50%. Depending on execution, valuation will get even crazier, but more than double, I doubt it. Same thing with Palantir. I mean, Palantir probably has a higher likelihood of more than doubling even this year than Tesla, but it did more than double last year as well. So Palantir's growth over the last year to date of 2025 was over 150%. So can it have another 150% year? Sure, but the probability is low. And as a result, I was like, you know what? I'm fine with 410 as a potential strike. I'm collecting some good premiums, and if Palantir goes to $410, like that's an insane appreciation as well. So I'm willing to sell my Tesla shares at more than double. That would be epic. Yeah, that was the whole thought process. Like if it gets up to $990, like I can roll it over 1,000, and I gladly take profit at $1,000 for Tesla shares from where they are now. So no problems with that. I mean, Tesla would be valued at over $3 trillion. We're over $3 trillion. Like that, it would be the third largest company in the world, next to, actually the fourth, next to Apple, Nvidia, Microsoft. Apple is 3.8, Microsoft is 3.4, and Nvidia I think is still over 4.45. Yeah, it'll be the fourth largest company. Okay, so are you not worried about holding a 3x instrument long term considering decay? So again, that's where the asymmetry comes in. For me, the risk is total loss. Like for me, the risk is indeed, yes, BITX can go down to zero and I can lose my entire investment in BITX. Like I'm totally fine with that. I'm comfortable with that because that's where the asymmetry comes in. Like I said, the total loss of that entire position is a small inconvenience versus the potential profit or the gains that I can generate if Bitcoin were to rally higher, in the future. So that's the asymmetry. With those kind of trades, I'm not looking into the decay because, like I said, I'm more interested in the asymmetry of the risk reward in that position specifically, as opposed to if it was like, that's why, you need to figure out the exits before you enter. Oftentimes we talk about trade management and risk management, and part of that is figuring out what that position is going to be for. I've talked to so many people that have turned their trade into a long-term investment, and a long-term investment turned into a trade because they saw gains too quickly. So we have to define what each position is going to be before we even enter. If it's going to be an options trade, treat it just like an options trade. If it's going to be a long-term investment, treat it like a long-term investment. If it's going to be a asymmetric trade, a home run potential where you're totally fine with this going down to zero or 1,000, there's nothing in the middle, that's also fine. Because, it's concentration builds wealth, as we know, with high conviction, but we cannot overly diversify our positions and portfolios because then there are no opportunities for a home run. So, in the future, I may also consider having a, moonshot or like a home run portfolio where I'm only taking super risky, crazy opportunities there because that's where you can see multiples like 20, 30 times. Those are going to be the smaller caps, higher conviction positions. But then keeping the core and the bigger portfolios focus on high long-term, high-quality companies. Nice when you're an insider and your spouse is the hedge fund. I know, right? Absolutely crazy. I want to take SPY puts today so I can be ready for tomorrow. Also, NVIDIA and Tesla puts. Good luck. We for a community don't trade puts. In other words, we don't buy options per se. We mostly sell options. But feel free to do what works best for your strategy. Any thoughts on CoreWeave and Tempest? I don't know if you already covered these, and can we buy TSM at these levels? I think TSM is extremely overbought. Not saying that it's fundamentally overvalued, but it's just extremely overbought technically. It was already overbought at 320s, and it's now even more overbought at 340s. I think a much stronger support is going to be around 274, 275. And we were quite literally there back in December. So, a lot of these levels, we just have to be a lot more patient for them to come down. And when they do, all you have to do is just execute. That's quite literally it. I mean, we've gone over so many companies that are on my radar now, like Broadcom is on my radar, Meta is on my radar, Microsoft is on my radar, Netflix is on my radar. There's so many stocks that are just like coming down. Like they are actually selling off. They're down 15, 20, 25%. from all-time highs. And when TSMC was down at those levels, 11%, that was a correction. That was the buying opportunity. And of course, from those levels, it has rallied right back up to all-time highs by over 27%. So BITX pays 17% dividends. What's the cat? Seems too good to be true. No, we've received dividends like crazy amounts. Like, it's insane. Depends on how many shares you own, but dividends payments have been crazy. I mean, we've been able to buy more BITX with every dividend payment that I've received from them. So, okay, CoreWeave and Tempest AI. So let's take a look at CoreWeave first. Incredibly volatile for sure. It is overall in a lower high and lower low pattern. So this is the entire downtrend for for CoreWeave. So that is the lower high and lower low. Resistance all the way up to $112. So right now it looks like we're starting to break out above this area of resistance. We'll go ahead and turn this level into a support. And the next resistance all the way up to 112, 113 for CoreWeave. Now, Tempest AI, TEM, also in this uptrend, higher highs and higher lows, and support level is going to stay put around $55. So $55, resistance all the way up to $99, close to $100, and we're seeing more or less a lot of consolidation in that range right now. So this has been a pretty range-bound stock here, pushing up, selling off, pushing higher, selling off, and then consolidating sideways a little bit. Have a plan depending on the type of trade you want to do. Yes, that's the overall idea, is that at least having an idea on what the plan is. So planning the trade and then trading the plan, right? Very simple in theory, but a lot more difficult in reality. But that's where the emotional discipline comes in, is you don't have to cut a winner too early if it's a long-term investment, and you don't have to hold on to a loser too long if it's a short-term trade. It's very important to cut your losers, hold on to your winners, and then treat a trade like a trade, treat an investment like an investment, and treat an options trade for just that, for generating income, wheeling a stock. And if you do expect more upside, there are other ways of managing that trade by rolling options if you need to. Thoughts on trading the VIX, considering it moves within a range and cannot go bankrupt. So VIX in itself is cash settled. So it's very difficult to trade the volatility, by the way, because there is tremendous amount of decay with volatility. And, the volatility in general has huge swings, right? Massive swings, which are very unpredictable. And as a result, it is incredibly challenging to actually time this trade. One of the most popular volatility structures was TVIX, if you guys remember from like years ago. And I don't think it's listed anymore because TVIX was one of the more popular volatility plays where people used to buy the TVIX hoping that they're going to be able to catch the spike, because I think it was like 4 or 5 times levered against volatility. And I think it's one of the only ETFs that I've seen most people lose money, because if I show you the chart for TVIX, I don't know if it's going to be available. So TVIX chart, it was from Credit Suisse, I think, daily leveraged TVIX, and it's not available. Let me see if I can find a different chart, but it literally looks like something you never want to own. Like never. It has never, it's just gone down. It has literally only gone down. If you scroll up to like weekly or there we go. This is TVIX. This is what TVIX looks like, which has of course been discontinued. So if you scroll down a little bit, XIV, TVIX. So TVIX provided long exposure, right? So long exposure meaning you are long on volatility. On the daily returns of 30-day blend of first and second month VIX futures, it was 2x leveraged, 2 times leveraged, and started trading in November 2010. And the leverage factor was decreased. Unfortunately, its issuer, Credit Suisse, retired it, delisted in 2020. So just 10 years they listed it, and look at this. This is what that looked like. This is decay illustrated graphically. This is what that looks like. Even though volatility has gone sideways, right? I mean, you could look at volatility chart and you could pretty much clearly see evidently that it's gone from like 10 to 60. That's the range. Fluctuates between 10 and 60. But this is what happens when you go long volatility structures. This is where decay absolutely kills you. And you know what people were hoping to make money on? People were hoping to make money on those little blips that you see that are the spikes. The little spikes that you see right there, that's what people were betting on. Now you tell me how skilled you are to catch that entire trade, right? How skilled do you have to be? How predictable do you have to be able to catch that spike right there? That 2018 spike, this right there. This is the 2020 COVID crash. Like imagine. And these are thousands of percents. Like this is, it's not showing you scale right now, but this is thousands. This is a 500% move right here in a very short span of time. This is probably a 200, 300% move. This is another 100% move. So yes, there is massive return, but the probability of success is so low, And so many people have lost money on this. It's ridiculous. So yes, I do not absolutely recommend for myself to go long volatility. Amazon thoughts on the drop the last few days. We will take a look at that. Simran, thank you so much for joining. Yes, very challenging for sure. This looks like a chart of how theta affects the price of the option, 100%. And as I said, you can take a look at volatility and it moves sideways, right? Very clearly. It doesn't go below 10 very rarely. It doesn't go below above 70 or 80 very rarely, but most of the time it's range bound. But any long volatility structures will look exactly like that. So, but coming over to Amazon. So Amazon also dropping 2 back-to-back red days, down about 2.5% here. And started to recover a little bit, pre-market back over 1.2%, and support level all the way down to 227, down to 221. I think it's pulling back with the entire market. S&P was down last couple days. NASDAQ also rolling down a little bit more, 1% down yesterday. So I think it's with the entire market. We are seeing a bit of a pullback for the market there. Yeah, quite possibly the worst chart I've ever seen. Yeah, and you know what? It's actually quite crazy because in one of the first things we talk about in our technical analysis course is, you know, how do you want your portfolio line to look like, right? How do you want your chart to look like, right? So I'll show you one simple example, okay? I'm just gonna share a screenshot of my options portfolio, which every week I share the update for that in our Discord and our Patreon. So I will show you what that looks like. Okay. So this is a very simple illustration of what is my options portfolio's chart, right? So this is what it looks like. So started in 2024, back here, and then this has been the ups and downs of the portfolio, right? It's sitting at just over 340. And so this is what you want your portfolio to look like, right? So when you're doing a technical analysis, like you want to look for companies, stocks that have very strong historical trends and charts that look very similar to what you want your portfolio to look like. You certainly don't want your portfolio to look like this, right? You don't want your portfolio to look like keep going down, right? So this is very clear evidence that you want to stay away from that as much as possible. And if it looks something like this, right, where you look at SMH or you look at the NASDAQ, for example, this is what the NASDAQ, if you want your portfolio to look like this, you invest in this, right? It's not that complicated. And yeah, that is easily the best, the worst chart. Is SXX going to zero? It's an inverse ETF, right? So again, this is another chart, right? Very similar. This is a bearish ETF, right? So 3 times bearish semiconductors and down to $2. You know, you just can't win. This is this is like walking into a casino, placing a bet on the roulette wheel, knowing well full in advance that the roulette wheel has a probability of you winning. Like, let's say there's red and black, and black, it literally is listed above the roulette wheel. It says 72% win for black and 28% for red. And you walking up to that table, betting on red, which has a 28% probability, and then betting it on leverage 3 times. That's what this is, that you want to absolutely stay away from. So that's what Michael Burry's short position chart looks like. For real, I think that's what it is at the end of the day, like, because if you keep shorting, yes, the payouts eventually could be big if you are proven right, but if you're proven right, and that happens very rarely because the probabilities are quite low. So during the trade tariff tantrum, SOXS went up 225%, and since then it's just been going down. I think it's important to remind our members that we're better off going long than short. Yeah, 100%. I mean, that you always, so the strategy that I focus on is long stocks, short options, because those two combined are the highest probability strategies. That's where you absolutely can be confident that if I'm long equities and I'm short options, that is where the money is. Because equities have proven time and time again that they appreciate, they go up in value, right? Highest quality companies, strong companies, they appreciate, they go up in value. And then when you're shorting options, in other words, when you're writing options, you're collecting premiums, right? You're raking in premiums. So both of the opposite, short stocks and long options, they're both very predictable, right? In other words, they're both they're a prediction game. They're a game of predictions. You have to predict when the timing is right, and nobody can time the market. So shorting stocks, we have to really know when the market correction is coming, which nobody can tell you, nobody knows. And long options, also the same thing, right? You have to know when the stock is going to be going higher. But with the opposite, long stocks and short options, higher probabilities, higher win percentages. If you're proven right before you run out of money, yes, 100%. The markets can remain irrational longer than you can stay solvent. One of the quotes, I think from Warren Buffett. So 100%. Okay, so let's go over to some more stocks. We got 8 more minutes until market opens. So what do you think about SCHW JPM? So JP Morgan is part of the shopping list. So it is also on our list of stocks that we are looking into, and it's part of the shopping list, like I said earlier. It is pulling back. Last week it was down over 6% on earnings and some comments from Jamie Dimon. If you do put together some technical analysis, we are looking at this as a higher low and this as a potential higher high, and it is now starting to roll down a little bit on that support here. So I'd be looking at around 295, so under $300 as a good support level to watch for JP Morgan. And then SCHW, Charles Schwab, recently broke out of this bull flag, coming back down to that area of support at $98, $99. So anything sub 100 is something to consider for Charles Schwab. So this is the overall range within which it was consolidating sideways. It was trading in. And then now we're seeing a little bit of a breakout and then a retest of that support. Anyone buying Meta today? Meta we covered earlier. I think, as I said, I would not be surprised if we see sub 600 on Meta. I think the technicals do suggest for it. Other members, investors, feel free to kind of share your opinion on this and your perspective. I wouldn't be surprised, like I said, if it trades sub 600, because there isn't much support between that 640 and that 600 level. If you scroll back, we haven't seen Meta bounce off of anything in between those levels. So, historically, that 600 level was a huge ceiling. We broke out, we got up to 640, we retested that level. So it was more like retest, get rejected, retest, get rejected, get up to 600, get rejected, eventually break out, come back, retest that 600 as a support now, get up to 640, get rejected, and then break through. And then on the way down again, you bounce off of 600, get up to 640, get rejected again, and then sold off further. So those are the key touch points for Meta. So can it bounce off somewhere from here? Sure. Yes, anything is possible in the markets, but I would say like this area inside this green rectangle, sub 600, very much possible. And if it is possible, then I would wait a little bit. Oscar, please, resistance and support. Let's take a look at OSCR. We are looking at Oscar with a quadruple top at $23, $24 and another resistance at $18 to $19. We got a support at $14. So good support around $14, resistance all the way up to $18.50 for Oscar. How about Microsoft? So Microsoft recently broke down as well. I think the next support is down at 445. So I'd be looking at this area right there. For Microsoft, again, this is the historical resistance for Microsoft, and support level is going to stay put at 445. Netflix is scary. I know. Netflix is indeed scary for a lot of people for sure. It is down over 20%. 32% from all-time highs. So yes, it is in a pretty substantial bear market right now. But it has gone through this. Like again, this is it's very normal. In fact, it was much worse than this for Netflix. Down 75% at one point. So it was trading down to $17. And then of course, we're seeing that recovery. When Netflix introduced advertising, the company pivoted significantly, 750% gain. And once again, we're seeing a similar dip. I mean, it's seen that before too. 40% down here, another 34% down here. This was in 2015, down 35%. So Netflix is a volatile stock. It goes through these cycles of 30 to 40% drops. So it's very normal. Netflix options ideas. If you're looking at Netflix's options idea, I would be looking at $82 as a potential CSP. Simple. Depends on how far you want to go as well. So if I'm looking at this right now for options chain for Netflix, I'm going at least a few weeks out. So let's say January 30th at the end of this month. Options prices need to update as soon as market opens in 3 minutes, but I'll be looking at $82. I mean, the delta is 21, so I'm assuming there's going to be decent premiums, not nothing. There should be something at least here for us to grab onto. So yeah, 2 weeks or 3 weeks, 21 to 28 days or 30 days, I'll be looking at those. $82. That's a very strong support. I think that's where it's validated a couple times before. That's where it's going to sort of retest and potentially bounce off of. Okay, everyone, market's about to open. What do you think that will drop the markets this year in March? Historically, we've had an event every year going back to 2020. I know, it's crazy. Have we though? Like if you come over to S&P 500, has every March, April time been a drop for the markets? Let's just evaluate very quickly. So this was March, April 2025, of course, needs no introduction. April 2024, we had a drop. March to April, we had a 6.6% pullback. Not a substantial pullback, but still, 6.6% is not nothing. 2023, okay. I mean, March, April, we were already on our way up. February, we had a dip. February 2023, we had a 9% correction, February till March. So middle of February until middle of March. Okay, this is creepy. 2022, wow. Okay, 2022, of course, we had the bear market. 2022, February till March, middle of March, we had a drop, 10% correction. If 2021 also is a correction or pullback, this is crazy. I did not know this. So coming over to March 2021, I mean, I don't know if you can classify this as a proper sell-off, but sure, from all-time highs in February until March 5th, 5.5% dip. Yeah, I mean, last 5 years. Yes, you're right. Matchbox, 3EB. We have seen a drop every year. And then, of course, we had COVID during the February 2020. So 5 years in a row of February, March, giving us some very good deals. So be ready. Next entire month's content, cash ready. Nice and big slogan. It's going to be written everywhere. I'm going to be wearing a t-shirt that says cash ready for the next 15 days to make sure that people are indeed aware that we are the most cash ready community in the world. Tomorrow I'm going to drop a list of my most profitable tickers for the wheel strategy. Turn in if you're interested. That's awesome. That's great. Always look forward to those analysis and insights from Dave. Looking forward to that. So markets are open. We are seeing a nice little lift in QQQs up over 1%. We got S&P 500 up over 0.5% as well. Tesla's pushing up 1%. We got Nvidia back up to 187. Volatility is also getting crushed down over 5.7% right now. So thank you so much for joining, everyone. I really appreciate it. Make sure that you drop a like and subscribe, and link's going to be down below if you're interested in joining us and making sure that your portfolio does not look like this, but instead looks like this. So happy investing. I'll see you all in the next